Hey friends, this is Gerald, and today we're going to be talking about how much you and I actually have to pay because of the tax increases. We're going to cover property taxes, luxury car taxes, income tax increases, all those sort of stuff, and whether the rebates that the government give us is actually sufficient to cover all these increases in tax. So the main idea is that Singapore is going to increase our GST instead of from 7% to 9% instantly. The government decided to delay it and progressively increase the GST over the next 2 years. So by 2024, we're going to have a GST of 9%. So while some people may cheer, that GST is not increased immediately because there's a kind of time delay, others kind of fear like things are getting expensive. What do we do? But the bottom line is we all need to pay more taxes. And here's why. You see, Singapore has a problem. Over the past 10 years, we have increased our social spending from like 17 billion to as much as 31 billion, and it's still rising. Not only that, our national debt to GDP has risen like over 30% in the past 5 years alone. So with rising cost and rising debt levels, this is not sustainable. And so according to our finance minister Lawrence Wong, he said Singapore needs more revenue, and therefore he proposes major strengthening of our tax structure. I know it sounds complicated, but basically says you need to give more money. You see, the government can raise money in one of three ways. The first is, of course, by borrowing money from the public, and they do so by issuing this thing called bonds, which you can buy, like the Singapore government bonds. But this means that the nation would have to pay back the debt sometime down the line. Secondly, which is a lesser known or less popular method, the government can actually print money. Well, they don't print money per se, but they work with the central bank to print more money into the economy. But the problem with printing money is that it's complex and usually it leads to higher inflation and you end up having to pay more for goods and services, which is kind of like the same thing. So instead of making things complicated, the government can use option number three, which is to increase the taxes and you just have to pay more upfront. But the real question in everyone's mind really is, okay, I understand the government needs more money and they raise more taxes, but the real question is how much more do we actually have to pay in dollars? And after reading Budget 2022, I'm pretty surprised. I think most of us do not actually have to pay that much more. So I'm going to break the numbers down for you. So let's start off with the first change of the tax structure, which is number one, changes in personal income taxes. So the current highest tier for the personal income tax is at 22% for incomes above $320,000. But it's Singapore. And you know how those pay to earn players in those games that you play, when they reach max level, right, top tier, they very quickly get bored. And therefore, the Singapore government has decided to add two more tiers from $320,000 to $500,000 and one additional tier which is above $1 million. And those rates, you are taxed 23% and 24% accordingly. So this kind of helps, making it a little bit more interesting for people who kind of reach the max income tier and you want to break new heights and get like higher income taxes. So yeah, now Singaporeans have two additional tiers to strive for in order to hit the maximum personal income tax bracket. Alright, jokes aside, so let's say hypothetically you make $1 million in personal income a year. Compared to the old system, how much more would you actually have to pay? So the difference is actually $5,000 more under the new system if you hit $1 million in personal income a year. However, if you're like me, you'll be wondering like $1 million? Come on, it's the world. A lot of people make so much more than $1 million a year, right? So that's why Singapore is having difficulty hiring or finding talents because the tax bracket is not sufficiently high. And therefore, if you smash that like button, hopefully we get enough people so that the government will hear that, hey, we need additional tax brackets for the ultra wealthy at like 20 different levels for Singaporeans to strive for. So apart from personal income, the government also made massive changes to property taxes. You see, Singapore has one of the highest home ownership rate. So according to our previous minister, this gives every citizen a stake in the country's future. So the main point is that if you want to have a stake in the country's future, you also need to support the country's future by paying more taxes. So according to the budget, the changes in the tax structure really just affects the top 7% of the property homeowners in Singapore. And from the number 7%, you can tell that our government is quite a fan of lucky numbers. And this reminds me of the time where I was in school. I was just minding my own business, trying to keep quiet so my teacher doesn't call me. And then the teacher says, hey, you, 7% more GST. And oh man, now I have to pay more taxes. So how much more taxes, you ask? Well, if you're the average homeowner in Singapore, you actually pay $0 in additional taxes. And this goes all the way up to the highest tier, in which the highest tier you're expected to pay an additional $96 a year in taxes. Although if you could ask me, honestly, I think the government should have made it like $69 if they wanted more kids in Singapore. Yeah, but seriously, if you want more kids in Singapore, you know who to sponsor. However, if you're property investors, you actually have to pay significantly more taxes every single year. So for the average investors, let's say you buy like a condominium, you can expect to pay approximately $300 in additional taxes a year. However, this jumps to a whopping $3,500 in additional taxes a year if you are investing, let's say, in like a landed home. So now let's move on to luxury car taxes. So the government has decided to impose additional registration fee, or rather an increase in the additional registration fees. And remember I talked about, additional levels earlier in the earlier part of the video. So the government has indeed heard our feedback and have decided to add additional registration fee tiers of like up to 220% instead of the regular 180%. And again, it's kind of like the same thing. Instead of changing the current system, the government just added like more levels for you to strive towards if you are trying to hit the highest tier. So that means if you just hit the highest tier, too bad, my friend, you're not the highest tier anymore. So you're gonna strive to buy even more expensive cars to hit the highest tier in Singapore. So if you own like a budget car, let's say like Kia in Singapore, you're practically unaffected by this change. However, if you own, let's say, like a BMW 7 Series or a Mercedes-Benz S450, that change will come to about $5,000 more in additional taxes. But, and here's a big but, if, let's say, you own a premium car like a Ferrari or a Bentley Continental GT, that number rises to like a staggering $81,000 more and additional fees just to sign up for a car. So as you can see, it gets really expensive if you want to buy luxury cars in Singapore. However, this would likely also mean that since people now can't afford as expensive a car, what they're going to do, they're going to drive up the price of cheaper cars, which makes cheaper cars more expensive as well. So now we know roughly how much more we can expect to pay in taxes. Let's look at the other end of the spectrum. How much more money or financial support can we expect to get from the government? So initially they made very, very big numbers. Like the government will top up an additional $640 million to our $6 billion insurance package to make it $6.6 billion. They will also give an additional $560 million household support to be rolled out for families. And I know this sounds like big fancy numbers, they then decided to further specify how this money is spent. And after doing some research, I found that we were given very funny timelines and numbers. And let me just read out what I found. So basically, every Singaporean over 21, you'll be given like $700 to $1,600 over the next 5 years. However, seniors in Singapore will be getting a cash payout of approximately $600 to $900 starting from 2023 to 2025. So when I read this, I was kind of like very confused because I don't know why some of the payouts like starts this year, but some starts next year, and why was some 3 years and why some 5 years. It was just kind of messy for me. And given that I'm not exactly very experienced in this kind of thing, I thought that maybe Singapore does not do our budget, every single year. But then when I quickly Google online, I realized no, actually Singapore does our budgeting every single year. So as a PSLE graduate, I felt that it was my moral responsibility to take the effort and really help everyone divide the number of cash payout by the number of years that we can expect to receive them. So in summary, every single year, everybody will get some money. I know, I mean, duh, but basically every Singaporean over age 21 will get $140 to $320, while eligible seniors will get approximately $200 to $300. Children and seniors will get an additional $150 in Medisave top-up every single year, and eligible homeowners also will get freebies of around $1,100, which can be broken down into like this categories over here. So while I know a lot of us are very scared, like a 2% increase in monthly expenses is a lot, let's try to rationalize it and break it down like to see the math. So the average household in Singapore spends approximately $4,900 every single month. That's according to Seedly, not me. I don't spend so much. So this, if you translate to dollars, represents an increase in $100 a month. Or if you annualize it, it's about $1,200 a year. So the funny thing is, if you count like the rebates that every Singaporean gets, the increase in GST is practically paid out to all of us unless you are a property investor, you are a very high income earner, or you own like luxury cars. It's almost like giving your relatives Hong Bao and then your relative, gives Hong Bao to your kids and you kind of just give and get the same amount of money. I guess Singaporeans, have this culture of giving and getting. It feels good to receive money even though it's technically your money that you gave them. So I hope that by breaking down the numbers, it kind of give you an idea of roughly how much money you can expect to pay and not, freak out about the increase in tax. And also really to help you understand that, oh, these are categories that are taxed a lot more and, I should kind of avoid all these things and live without a car, for example, if you want to save up a lot of taxes. So let me know what you think of the budget 2022. Honestly, I felt that it was kind of nice that they do not increase taxes for everyone by a huge amount. In fact, the rich really get taxed a lot more compared to the average Singaporean. So it's kind of nice to see how that they are redistributing wealth to people who need it the most. So what do you think after you've seen budget 2022? Personally, I felt kind of relief. I wasn't as scared as I thought I would be. And I realized like the average Singaporean who don't spend a lot of money, if you're frugal, you don't really feel the pinch of the increase in taxation in Singapore. I do get that the government wants to, manage property prices and therefore, tax a lot if you want to buy properties. And therefore, this makes the Singapore stock market a lot more attractive relative, to the property market, which I think makes a lot more sense. And it's also really nice to see how much the government is trying to redistribute wealth within our society to help the have-nots. And hopefully this will make Singapore a much more happier place for everyone to live in. So with that said, I hope you like this video. Let me know what you think and I'll see you in the next video. So be sure to subscribe and take care everyone. Shh.